All right, Ron, so we're going to kind of take you through some questions that sellers, buyers frequently ask us. So let's get to it.
All right, let's do it.
Anything new in the lending landscape as it sits currently now?
Yeah, absolutely. So, last year was obviously, a little bit of a challenge, right? You had a lot of lenders, they weren't able to actually process loans due to COVID. And a lot of the, we call it non-QM or non-qualified mortgages, a lot of the broker channels, that really shut down, right? Jumbo loans, so anything above conforming loan limits, those actually were a little bit more difficult. Now that things are opening up a little bit, the standards have shrunk, right? So they've kind of loosened the box in terms of the overall lending standards across the board, which is really exciting, right? Also, a lot of those jumbo lenders and those non-QM lenders, they've come back into the forefront, and it's all about risk, right?
Yeah.
So when it comes to lending, it's all about risk. So when you have, unemployment shooting 46% and all these crazy statistics, lenders say, nope.
Not today.
Right? But the silver lining with all of that was that the Fed, they decided they reduced rates down to 0 last year. And on top of that, they went in and did asset-backed security purchases, and they bought $80 billion when it came to mortgage loans as well as treasuries. And that really supported the market, right? So that's what's really key, is all of that buying. So what's happening right now in the market is they're starting to scale that back, right? Or tapering. They call that tapering in the market. So now, instead of buying $80 billion, they're going to start cutting that back. And that's why you're seeing rates kind of tick up a little bit.
Okay. And that brings us to our next one. I know you wanted to get Ron's take on interest rates going up and things of that nature. So I'm curious, your take on that, Ron, and I know our buyers are definitely interested in that.
What average interest rates are you seeing right now as we're kind of creeping back up?
Yeah, so right now, we're right into Q4 of 2021. The MBA, so that's the Mortgage Bankers Association, they're forecasting by the end of next year for the standard 30-year fixed. And obviously, with the caveat, there's lots of caveats when it comes to lending, and you have to give APR and all that extra information. But just based on their forecast, they're looking at about 4%.
Wow!
So they're looking at a 20 basis point increase, or basically 20% of 1%. So almost about a quarter increase each quarter as we go throughout the year. Okay. So what's key there is, if you're pre-approved at a certain level and you were pre-approved at, let's say, 3.25, now all of a sudden, if you were at your limit and you don't qualify at 4%, then you need to adjust your overall schedule, right? You need to start looking at properties that are at lower price points, if it means that you're going to be buying 6 months or 12 months into the future. The good news is, let's say you're out where it's a new build, right? So a new construction. We actually have, at Guaranteed Rate, we have an extended rate lock option.
Oh, wow.
Right? So if you're looking at it and saying, okay, my thesis is that rates are going to go up next year and my home isn't going to be done for another 6 months to 9 months, you could actually lock in today at today's rate, and there's a whole bunch of caveats with that, but it's kind of like an option, right? You put on a credit card, you pay a little bit, and then what you're able to do is you just lock it in. But if rates go down, right? So let's say the thesis is all wrong and the MBA doesn't know what they're talking about, right? Then what happens is you can do a float down, right?
Okay.
So it's called a rate renegotiation.
Oh, wow.
So the big key when it comes to lending and when it comes to looking at rates and all of that, it's all based on your timetable, and I don't see that there's never a time to jump into the market, right? So
you hear that, people?
Yeah, I was going to
right.
say, so now is the time to buy.
Ever.
The only caveat I'd say about that is if someone were to buy a home and then they knew they were going to be out in 2 years. right? That's where it gets a little bit iffy
Yeah.
because now you're talking about a specific timetable,
Right.
right? So flippers in a rising interest rate market and markets where you don't have that continued appreciation and the bidding wars and everything else we experienced in spring and summer, well, you may have some carrying costs, right? So that's something definitely to consider if you're an investor and you're doing a lot of flips.
Gotcha.
But if you're just buying as a couple, you're buying a new home, it's always a good time to buy, right?
Always.
To buy with us, though.
Yeah.
No, of
With
course.
Alex and Kacy. And Ron
Exactly.
as your lender.
Yes.
There you go.